Welcome to the overview presentation of the Employee Benefits Program for eligible employees of Vital Visions. The upcoming plan year from October 1st through September 30th will present itself with very little changes, if any, except for cost to the employees participating and eligible for this plan. A few things to discuss prior to going into the details of the benefits themselves, or just an overview of a few of the details that will help you understand the bigger picture. Please note that the medical plans are all fully compliant with federal regulations, including the Affordable Care Act of 2013. What this really means to you is that this plan provides you subsidies through your employer, and the subsidies available through the exchanges are therefore not available to employees. Recently, the laws were changed so that families can access the exchange for coverage if desired. COBRA extensions also apply to medical, dental, and vision. If your employment ends for any reason, you can elect to take any of these three plans that you're enrolled in at the time your employment ends for up to 18 months to continue that coverage between employers or for purposes of just retaining the coverage for a period of time. The company provides a Section 125 plan, which simply means that the premium cost share to employees is deducted from your pay on a pre-tax basis. While this program saves you tax dollars for the premiums that you pay for medical, dental, and vision as core benefits, it does lock you into your elections according to the IRS guidelines for the plan year, unless you have a qualifying event such as marriage, birth of a child, loss of coverage elsewhere. Please let your Human Resources Department know if you experience a qualifying event that requires that you change benefits during the middle of the year. Vital Visions offers choices to its employees with regard to the medical plans. It offers 3 plans from which employees will choose the plan that best meets their needs. These plans have varying cost-sharing amounts. The deductibles, of course, are a little different to get variable prices for the premium paid. The plans are very similar in a lot of aspects. One of those aspects is that they all 3 use the statewide or national PPO network with Blue Cross, including a Blue Card feature, so that it gives you access to all the Blue Cross networks across the nation and internationally. They're also the same with regard to their coverage, meaning that they cover the same conditions, cover the same treatment plans that are medically necessary under medical guidelines, and they are similar in that respect. None has a limit or an exclusion that the other doesn't also include. They also all 3 give you access to the ancillary benefits like virtual office visits that I'll go through in a few slides. And a lot of the benefits are the same. For instance, the primary care office visit is $25 for all 3 plans. There are differences, like the copay for specialty care. The deductibles, as you can see in this blue shaded list on this slide, for each employee to have their own cost of benefits and customize those plans financials to yourself. So let's look at the 3 plans side by side. The left-hand column shows you the benefits that we're talking about, or the plan feature. And then we're going to talk about the members' cost sharing when you use the insurance. The annual deductibles obviously are different. Those apply to just larger claims like hospitalizations, in or outpatient surgeries, high-dollar diagnostic testing, for example. Most of the care under these traditional PPO plans, however, is a copayment. Office visits, as you can see, have a primary care $25 copay. That office visit charge is covered at 100% after a copay. $60 in the first plan for a specialty physician's office visit, and you see that it gets a little bit higher as you go across these choices in plan. They all provide copayments also for urgent care. After the copayment, the plans pay 100% for the balance of that urgent care facility charge. Emergency rooms, same way. Copayment afforded in each plan, and the plans pay 100% of the emergency room charges after these copayments have been met. You should know that in the emergency room setting, there are going to be other charges that may spill out to the deductible, but the copayment is to protect you against the larger than average emergency room charge that exists in this current market. All 3 plans also have copayment arrangements for any prescriptions that are prescribed by your attending physician. You'll see a list of several amounts. Those amounts are tied into the negotiated price of the medication that you're taking. The higher cost the drug, the more the copay share will be for the member. This program also offers mail order opportunities, which allows you to pay a lesser amount equal to 2 times your copayment for the retail allowance. It also allows you to have a 90-day supply delivered to your door. So conveniently, you can get mail order on any maintenance medications for any of these three plans. Note that the plans have a coinsurance after the deductible. So if you have a larger claim, like I said, surgery, hospitalization, deductible applies, then you pay a share, which is 30% in these cases of the discounted rates after the deductible. If your co-payments during the year, your deductible, and any other out-of-pocket expenses that you share under the plan's eligible charges reach the out-of-pocket maximum listed here in the calendar year, you're at 100% for any of the three plans once you reach that out-of-pocket maximum, if you do. All three plans also have, importantly, preventative annual wellness exams at 100%. As long as you're seeking a standard physical for a person your age and gender, you shouldn't have any out-of-pocket expense for that charge once it's submitted to the insurance company. So these are your options. They do have a variable price attached to them that employees would pay for their share on a per paycheck basis. So let's take a look at the costs. This slide shows all three medical plans listed at the top. Deductions based on the coverage type you might elect, single employee at the top all the way through full family at the bottom. And you can see that more dependents or that you add, of course, the more cost that might be. Single parents, employing children rates are a little bit lower than even the employed spouse rate, but obviously the employed family would include a spouse and children. Tax-free, so you want to lower these by about your tax bracket, which is close to 25-30% of this is not going to be hitting your net income due to the handling of the deductions prior to taxes being applied to your check. It's very important to pick in-network providers when utilizing insurance plans these days. You can get a lot of big surprises with out-of-pocket, balance billing from the providers that are not in the network. Plans don't get the discount, so you're not contracted. They're not going to give a discount, so your cost sharing is going to be a little bit higher. And then there's that surprise bill that you might get unless it's an emergency room visit. You want to go to azblue.com. You simply just select Find a Doctor at the top tab. You simply then tell it you're a member who has a plan through your employer. You then just select your networks. All three plans, as I said, use the statewide national PPO network. So you just pick that one from the drop-down list of any number of networks that they use. But this is the one you'll select. Enter your zip code or wherever you want to try to find a provider and the type of provider you're looking for. The system will pull up a list that you just review, make an appointment with those in-network providers. That'll help you get the best benefits out of these plans. I don't review the out-of-network benefits because they're so onerous as far as what balance bill you end up paying. Ultimately, you really want to work hard to use in-network providers in all cases, and even in a surgical situation where they might be selecting anesthesiologists or second assistants surgeons for you. So just pay attention. If you need any help with that, just let us know. Couple of programs you should probably register for MyBlueNet. All the things that I just described, looking up a doctor in your network, are very easy when you're part of BlueNet. You'll have a nurse on call there. You'll have healthy blue lifestyle kind of articles and suggestions and some fun activities that you can do to keep your lifestyle a little healthier than probably most of us are. Care management's there, and WellBe is a second opinion program that I'll talk about in a minute. And then you have mobile apps that you can access through this BlueNet site. It's really your personal portal for your Blue Cross plan, so you can see claims and other information that's applicable to your plan, like a summary of benefits. So you can review that anytime without looking for that piece of paper that may have been lost in the shuffle during open enrollment. Let's look at the apps. First one is just MyBlue app. Gives you access to your ID card, claims, features, searching for doctors right there on your mobile device. The second is convenient for people that would like to do a virtual office visit when you're sick. A lot of primary care is available there. Counseling or psychiatric is also available in this Blue Care Anywhere app. So either way, Google Play or the App Store, just download those on your phone. Give you easier access on the go, especially to your health insurance plan. WellBe is also available in those apps, and what it is just a second opinion that's done coordinated with your current physician, just to make sure that surgeries are necessary. Sometimes when you get a second opinion, you learn that a surgery may not be absolutely necessary and there are alternative methods. And if we don't want to do surgeries, and probably the case with most people, you just get a second opinion and make sure it's valid. Doesn't cost you anything. Sometimes it can save you the cost of surgery and the risk that you take when you have any kind of surgery. Gift cards are available. Just go on to the website at MyBlue and find that WellBe program, and it can help you with that second opinion option. Let's move on from the medical to other coverages. You have a lot of voluntary benefits available through Principal Financial Group under the Final Visions program. life insurance, dental, vision, and even disability insurance to cover your income in case you're unable to work are available to you to select as an employee eligible for benefits, not only as an initial eligible employee, but also at each open enrollment. The voluntary life offers you an ability to, as a new employee, to take up to $100,000 in $10,000 increments with no health questions. You can take up to $300,000 or 5 times your salary, whichever is less, and you can also elect it on your spouse or dependent children in the amounts that you see here. So please take advantage of the voluntary life, especially as a new employee. During open enrollment, there are some limits to what you can elect to take without health questions, but during open enrollments, and you're allowed to take up to what you want. Fill out health questionnaires if it's over the guaranteed level after you're a new employee. Costs are shown here, but they're based on your age band. So their costs are per thousand. So if you take $10,000 of additional life insurance, you'll want to multiply that number by the 10,000 benefit. So it's simply $10.07 for a person under 27. When you go up to the 50 to 54-year-old, you're looking at what would that be? 70 cents, 72 cents to go for 10,000. That's per month. Voluntary dental, pretty straightforward. You have 2 plans here. It's just select, so you'll pick one of these plans. The first low plan is really providing a lower cost to everybody. It's a plan that people might want to take if they have just teeth cleanings, no major serious things going on with their oral hygiene or test or difficulties there. Your preventative services, your teeth cleaning twice a year, no deductible, no out-of-pocket expense for you. As long as you're using a contracted principal financial dentist, you'll have that twice a year teeth cleanings called preventative, without deductible or any other cost sharing. You have major basic services or cavities being filled. You got in this low plan, $25 deductible, and they pay 80% of that discounted cost for cavities being filled, basically. Major services like dentures, bridge work. After the deductible, if you haven't already paid it, it's 50% of the discounted cost for major services. Both plans, as you can see, have orthodontic benefit, smaller in the low plan, so we can keep that cost down, and a little bit better benefit there if you have kids that want to have braces. It is for children up to age 19 only. So probably should note that that's a child-only benefit there. But high PPO, bigger maximum for the insured members, 90% instead of 80% on basic, 60 instead of 50 on major services, and a little more expensive just because it's got better benefits and covers you better when you do seek out dental care. And you'll note that the orthodontic benefit is higher as well, at 50% up to $1,500 for that. Again, these costs are tax-free out of your pay. So you'll save a little bit of money there just from that program offered to you by Vital Visions to do pre-tax deductions. Voluntary Vision. This Principal Financial Group runs the Vision Care program. They utilize a network called VSP, which is a separate insurance company that's built a great network in America. So running that network doesn't mean you're insured with VSP. You're still insured with the Principal Financial Group, but they utilize this larger network. If you go in for an exam to get your eyes checked, you pay $10. That exam's covered 100% after that. If you do need to correct your vision, you'll pay a $25 copayment to correct your vision for most things. And I'll talk about when that might be higher in just a second. If you choose glasses, all those types of lenses, not too fancy, but they'll be covered at 100%. For single, bifocal, trifocal, and lenticular especially. You also get, some things with the lenses like glare reflection and some other enhancements. No shading, no progressive lenses, but you can pay the difference to the provider and get those sort of things done. When you choose glasses, you've also got an allowance for the frames. That allowance is $150. You can replace the frames every couple of years, every 24 months. But if you want to spend over that, you just pay the difference. $250 frames, you're going to pay $100 on a discounted rate through this program. You can get contacts in lieu of glasses. That means instead of getting glasses, you could get contact lenses. If they're medically necessary, you're going to pay that same $25 copayment and get those contacts at 100%. If it's elective, which it is for most people, you pay a little bit higher copay, and then you get a same $150 you get for frames for these contact lenses, so you can buy as many of them as you can. Even if you want to purchase them online. Frequency is just the amount of time or frequency of being able to cover these things by the insurance program. Every year you can get an exam. Every year you can replace the lenses, whether in glasses or contact lenses. The frames are the only one that you have to wait 2 years to replace frames and have it be covered by the plan. But very low cost for employees to have a vision care program, and we should have plenty of access to providers up in your area. One more thing, voluntary short-term disability. A lot of people get confused about what this insurance is about. It's really to cover income, so you get some income if you become disabled, whether it's for an injury or an illness. Your doctor just says, don't want you to work for a period of time, a month, for instance. This plan is going to help pay income to you so you can support yourself and pay bills at home that would otherwise go unpaid, probably without income coming in. The benefits start for either illness or injury on the 15th day. The first 14 days, no payments will be calculated, but after 15 and up to the point your doctor says you could go back to work, you'll get those days paid as income replacement. Now, what do you get paid? 60% of your pre-disability earnings. So if you become disabled, this plan will pay you 60% of those earnings. Since you pay for it, it's not going to be taxable benefits to you as it's paid during a disability. When the disability is over, of course, certainly the physician will tell the insurance company and benefits would stop then as soon as you're ready to return to work. And this is a short-term plan, which means that it's going to cover you for what amounts to 22 weeks after the first 2 weeks are that benefit start date or elimination period for 24 weeks, which amounts to about 90 days for you to have coverage. 140, 180 days of coverage. The age bands there are listed and the rate per 10 of weekly benefit. It'll calculate inside the Benefits Connect system when you enroll, so you don't need to be concerned too much about calculating this, but we can go through some examples for you if you'd like to give us a call at the Reach Group. Let's talk about enrollment. As most people are aware, the company is using Benefits Connect for online enrollment platform. No more paper enrollments, thank goodness for everybody. You'll just want to make sure you're registered, complete your enrollment online. If you're already registered there, you can click Forgot Password if you did, but that's where you're going to go to elect benefits. A flyer should be attached to the information that's distributed to eligible employees, so you have that as well. Here's where you're going to manage and view your benefits, make changes during open enrollment like you're looking at now, but just know that you can look at this and use it as a tool throughout the year, not just during open enrollment. You come to a welcome page. Just read that for some general information. You'll look at your profile and want to complete that and make sure everything's accurate. And then you begin to go through the coverages one at a time. Elect or waive the coverages that are presented to you. Elect dependents if you did list them in your profile, and make sure your beneficiary for whatever life insurance you take is up to date. But pretty straightforward system. If you've already used it, you're probably very familiar. But for those people that might not have, it's a pretty simple system to utilize from an employee standpoint. Open enrollment for 2023, the site is open now at Benefits Connect, so you could go on and take care of your activities immediately. It'll stay open until Friday, September 15th. If you have any questions at all, you can contact myself or Joanna at the Reach Group. That information should be contained in a flyer that you received already or would be available to you by contacting Human Resource, but give us a call. Questions sometimes are of a personal nature, and we'll keep those confident and close to the vest so you can make decisions based on full disclosure to somebody in the Reach Group that will be able to help you make a decision. We'll explain the benefits to you. We're available to you all year long. We want to help make sure that the healthcare system that is difficult to navigate sometimes doesn't chew you up and spit you out. So just call us when you need help, whether it's prior to a claim, after a claim's paid, to help you understand what you might want to be doing or preparing for in the face of that claim. Thank you very much for your time today. If you have any other questions, need to contact us, please do at the Reach Group. Again, the number's on the flyer. Contact HR if you just don't have access to that, but we're here to serve and answer questions. So thanks very much for your time today.